And joining us now from Los Angeles, Kirk Hartman, Chief Investment Officer of Wells Capital Management, where he helps oversee about $355 billion in assets. Kirk, good to have you back on the show again. Now, I think you're saying sell Europe, buy the U.S. and Asia, but we have Fitch talking about possible contagion in the banking industry. What do you think of their predictions?
I thought the report was a bit overstated. Direct sovereign exposure for the banks is actually pretty small. The other thing it did not break out direct corporate exposure. So if you look at the multinationals, is a loan to a European subsidiary a loan? Is that something you have to worry about? If you look at a great company like Siemens or BMW Auto Receivables, that was not broken out in the report. So I thought the conclusions of the report were a little bit overstated.
Okay, but Kirk, given that, I mean, would you actually touch financials right now?
Well, financials are going to continue to have difficulty, but again, I think I mentioned this in your program last time. I'm long-term optimistic and short-term pessimistic. You have to worry about Europe. I think the bigger worry is the direct or the indirect economic exposure, and that if Europe continues to deteriorate, it's obviously going to reduce GDP. And, in the Port of Long Beach, there was something like trade this year for the U.S. is up something like 20% out of the Port of Long Beach, and you worry if that's going to be impacted. So I'm more worried about the direct and the indirect economic exposures.
Okay, but what about these concerns about CDSs? I know we had a few stories out on J.P. Morgan, Goldman Sachs, and they're not really talking about, I guess, gross exposure, more about net. Any concerns there in terms of how much debt they hold from the European side, how much of these CDSs they have to fund, and how much they have sold?
Well, this gets to the issue of counterparty credit risk. So I think that's something you do have to worry about, and that gets to individual entity risk. So clearly, firms that have CDS exposure to some a big institution that could have problems are going to have some difficulty. But again, I think that's fairly contained. I think the U.S. banks have reduced that a lot over the last year.
Yeah, well, we'll see the real effect, I guess, if, God forbid, we do see a sovereign state to go into default. Now, Kirk, so if you're short-term pessimistic, what does that mean for the markets going into year's end?
Well, I think volatility is key. I mean, if you look at oil, I think you want to buy oil when it's 80 and you want to sell it at 102. And it seems to be the story of the year. Go long volatility in almost every sector and in every commodity, and you can make money during the year. So I think volatility will continue to be king.
Yeah, volatility. So how do you play volatility then?
You buy it when it's low and sell it when it's high. And I think you also have to be a long-term investor.
Yeah, that's hard to do. You know that, Kirk.
Well, I think for professional traders, it's not that hard. And actually, I think that's why a lot of traders and hedge funds are doing pretty well in this market. But I think the key is if you're a long-term investor, you want to look for buying opportunities. I think I've talked about this for a while. I love infotech. I think that the tech sectors can continue to do well. So, those are the kind of opportunities you want to look at.
And the agricultural sector as well. I know you talked about Apple in the past and infotech, but this is new to me. Agricultural, what are you seeing there?
Well, agricultural is doing well. Look at the problems in Thailand and look at the problems, in the rest of the world in terms of food shortages. And actually, I think this is a lot of the export trade that's coming out of the U.S. is agriculture. So, in addition to infotech, agriculture has been a good sector for the U.S.
Kirk, one more question for you. You say you're interested in emerging markets. What are you buying in emerging markets? Same thing? Is it infotech? Is it agricultural? Or is it more of different sectors that you're eyeing?
Well, I like dividend yield. There are a lot of emerging market stocks that have something like a 4% dividend yield. Emerging market stocks were down something like 20%. They came back nicely in the last quarter. They're down something like 10%, but they're still way behind the U.S. So I think emerging markets, especially emerging market stocks with dividend yields, is a good place to be.
Okay, Kirk, good to see you. Thanks for that. Kirk Hartman of Wells Capital, where he helps oversee $355 billion in assets.